Welcome back to our channel. Today, we're going to explore a fascinating topic that combines finance, ethics, and social responsibility. Imagine a world where banking is not just about making profits, but also about following ethical principles and promoting fairness. Well, that's exactly what Islamic banking is all about. So, join me as we dive into the world of Islamic banking and discover how it works. Islamic banking, also known as Islamic finance, is a system of banking that operates according to the principles of Islamic law, known as Sharia. It goes beyond mere financial transactions and focuses on adhering to values and principles that promote economic justice and social responsibility. Today, we'll explore the history of Islamic banking, understand its core principles, and even walk through a practical example. So, let's get started. To understand Islamic banking, let's first delve into its history. While its roots can be traced back to the early days of Islam, Islamic banking gained prominence in the 20th century. In fact, the first modern Islamic bank, the MIT Gamur Savings Bank, was established in Egypt in 1963. Since then, Islamic banking has experienced remarkable growth, with dedicated Islamic banks, Islamic windows in conventional banks, and Islamic financial institutions operating globally. Islamic banking has gained significant traction in Muslim-majority countries like the Middle East, Southeast Asia, and parts of Africa. However, it has also gained recognition and acceptance in non-Muslim majority countries, as people from diverse backgrounds embrace its ethical and inclusive principles. This shows that Islamic banking has the potential to transcend religious boundaries and appeal to those who prioritize ethical finance. Now, let's explore how Islamic banking actually works. To illustrate this, let's consider a common scenario: buying a house. In conventional banking, you would typically take a loan from the bank and pay back the loan amount plus interest over time. However, in Islamic banking, a different approach is taken. One common financing arrangement in Islamic banking is the murabaha contract. Here's how it works. Suppose you want to buy a house but don't have enough funds up front. The Islamic bank purchases the house and then sells it to you at a higher price, which includes a profit margin. Instead of charging interest, you make fixed installment payments over an agreed period until you fully repay the bank. In this way, the bank earns a profit from the transaction, and you acquire the house without incurring interest. Now, you might be wondering, how do Islamic banks make profits without charging interest? Well, Islamic banks utilize various Shariah-compliant mechanisms. For example, they engage in profit-sharing arrangements like mudaraba or musharaka, where the bank and the customer share the profits from an investment or business venture. They also earn income through fees, service charges, leasing contracts, ijara, and asset-based financing arrangements, such as murabaha or sukuk, Islamic bonds. The following types of accounts were accepted: 1. Savings accounts. 2. Investment accounts. 3. Zakat accounts. No interest was paid on savings accounts, but withdrawals could be made on demand. Small, short-term, interest-free loans for productive purposes could be made. Funds in investment accounts were subject to restricted withdrawals and invested on the basis of profit sharing. The zakat account attracted the official amount of zakat. The MIT Gamur project was successful, as deposits increased from 1963 to 1966. The bank was cautious, rejecting about 60% of loan applications, and the default ratio was 0 in economically good times. Before we conclude this video, we kindly request you to support our channel. If you found this information helpful, please give us a like, share it with your friends and colleagues who may find it beneficial, and don't forget to subscribe to our channel for more insightful content on Islamic banking and finance. Islamic banking offers a unique approach to finance, emphasizing ethical principles, risk sharing, and asset-backed transactions. It aims to create a more inclusive and socially responsible financial system. If you're interested in Islamic banking, it's important to research and understand its principles and practices before engaging in Islamic financial transactions. By doing so, you can make informed decisions and choose banking options that align with your values and goals. Thank you for watching, and we appreciate your support. Stay tuned for the next video in our series on Islamic banking.